Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, how you going? Welcome to the show. Pleasure you joining us today as we navigate this crazy world of property. And it's particularly crazy right now because depending who you talk to, everything's about to go south. There's big warnings. Check it out on the media, particularly some parts of the media. Have a look and they'll begin telling you that property's going to crash and everyone's going to lose all their dough. Depending if you're a glass half full or a glass half empty type of person, you might see this in your own particular paradigm. But my view is that it's always a good time to buy a property if you're buying the right property and you are financially in a position to be able to capitalise on property markets. And markets in flux often offer the best opportunities for creating long-term wealth in property, something which I always talk about. You can never choose the bottom of the market, you can never choose the top of the market, but as long as you're getting the right advice and you're making the right decisions, as an asset class, property should serve you well. But I'm not really in a position to offer any advice around that. I'm just a property investor like yourself, and I lean on people right across the industry to make sure that I get the information so I can make educated decisions or smart property investment decisions. For a bit of a plug for smartpropertyinvestment.com.au. So today, to help me navigate the world of property as it is right now, welcoming him back in the studio. He was last in 26th of April, and we had a bit of a around the grounds, what's going on in markets right across Australia. Simon Pressley, Head of Research, Propertyology. And I'll point out to Simon, I didn't mention this beforehand before we come on air, but the podcasts I do with you are often the most popular. For some reason, people like what you've got to say.
I don't know why that is, but I'll take it.
Well, it's probably got something to do with your title, research.
Right, okay.
You love research, right?
I love it, absolutely love it.
So when you get up in the morning, do you go, oh, I love research?
Oh, I don't know what it is. We're all wired differently, and I love trying to join the dots. The property world to me is just full of all these dots, and I'm just trying to join them together and see what sort of picture it creates. If it's a positive picture, then we're excited as a property investor. If it's if the picture's showing some clouds, we need to know about that as well.
So are these dots all in a line at the moment, or they're all over the place?
They're never all in one line.
No.
In spite of good points you make about the property media, it tends to report as if Australia is one big property market, but it never has been and it never will be. I don't know why that happens so often, Phil, because we know that Australia is a very diverse country. We talk about it all the time, but yet we think we've got a linear property market. Our economies across our capital cities and regional markets are completely different. It's really, really diverse. So what you said is spot on. It's always a good time to invest. The key question is never when, it's where.
Yeah, and I agree with you, and my point would be that there's some very good property media out there. I like to think Smart Property Investment is one of them. We see the world a particular way, and myself as an investor, I can apply a particular brand of journalism which mixes the fact that I'm good at being a journalist, and I'm also, I like to think, good at being a property investor, right? And I'm good at being a property investor because I lean on people to help me be a better property investor. When you look at the wider world of the media, you've got to be careful of who you listen to, and my view on this is that, a lot of the people writing about property have no idea about property.
Absolutely.
A lot of the people writing about property are the people who are complaining, sipping their latte and eating their avocado on toast, complaining about not being able to get into the property market because it's too expensive. So you've got a particular leaning of some of the journalists who are producing stuff around property, which raises massive red flags. And I'm not here to beat that up. It's not my job to do so. But, when
I'll do it for you, mate. I agree with you.
Don't worry, I'm going to hand over. I've set you up here. But, I'll call out a particular media product. And I read it every day. I absolutely love it, the Daily Mail. It's where I get my celebrity gossip and I understand what's happening with the world, and I enjoy the journalism. It's what I do when I don't want to be thinking about work, when I want a bit of enjoyment, right? And I love reading the property stories on the Daily Mail because it's just a beat up. Some days, it's the best asset class in the world. The next day, poor old Johnny lost all his money on some punt in some regional town somewhere. It's sensationalist stuff, right?
Yep.
And you read it because it's entertaining, but I wouldn't be using that as a backbone for giving me direction on where to invest in property in Australia. And I tell you what, those journos writing it probably aren't property investors. What do you reckon? This is when I pass over to you, beat the media up. And if you want to give me a hard time, I'm happy for that as well. And for our listeners, I've got my hands in the air right now in the surrender. But what do you reckon?
It's what you say is true but sad. I think, unfortunately, it's not news that's being reported. It's personal bias of the journo behind the keyboard, and whether that's about property as you said, they take delight at talking a market down because that they feel that might increase their chances of owning one, or they've got a grudge against society or something like that, or politics or whatever. A lot of what we read is not so much news; it's their personal opinion. Yeah. As a property investor, though, you can't avoid it. I don't think it's ever going to change. Sadly, you just need to be mindful of just because you read it, it doesn't mean that it's accurate or a true reflection of what some other people might think.
So if you read this media, they're going to tell you that Australia's property market, and Australia, let's remember Australia. I remember going back, my first history lesson in year 7 at school, they said, get a piece of tracing paper out. Okay, get a bit of tracing paper out. And they said, put that tracing paper over Europe and trace the borders of Europe from Moscow through to Britain, from the bottom of Italy up to the top of Norway, right? Now take that same tracing paper and stick it over Australia. Europe fits within Australia.
Yeah, about 20 countries or something.
Yeah, it's ridiculous. I still remember back there going, shit, Australia is a big land, right? So to group Australia as one property market is idiocy. When you look at some of the, sound like I'm getting on a high horse here, and it's not really my job to do so, but when you look at some of the regulatory bodies' actions and activities over the last 3 to 4 years, a lot of it has been an attempt to influence the state of Australia's property market, when really they were only looking to influence a couple of markets, Sydney and Brisbane. So fast forward that where we are right today, some parts of the media are going to tell you that you shouldn't invest in property, that it's the most overpriced asset class in Australia. Globally, when you look at World Bank numbers, that the debt to income ratio in Australian property is
which is a useless ratio,
off the chart. So don't touch property. If you touch property, you're fucked.
Yeah,
And I wouldn't normally use that language on this particular, but it's a really good descriptive term. Is the market that bad, Simon? I want to get into this in this podcast today. How bad is the state of Australia's property market, and should we or shouldn't we be touching it?
I'll reiterate what I said earlier. We live in an extremely diverse country, and the real opportunities are probably in the places that aren't getting reported in the mainstream media, but that's not unique now. I always take an objective look of every capital city in Australia, of every regional location in Australia. That's my profession. I do that all day, every day. And I actually think that in spite of all this negativity, we may well find in a few years from now, Phil, that 2018, 19 might go down marked in time as an opportunity where those who made the most money disregarded all that negativity and realised that they had a chance to buy when there was less competition. They could be more selective about which property they bought. They stand a chance of getting it at a better discount to what the original list price was. If they get that location selection right and they're safe with their cash flow, so they're not hurting their household budget, you may well see in late 2019, 2020, things pick up really, really well. And those who make the most money are those who were already in the market, not waiting to listen to the media to say, hey, we've now got a boom going on and everyone rushes in. Cast your mind back to 2011. We now know that Sydney had a boom, right? But in 2011, Sydney and 7 other capital cities declined in value. Now, Sydney's decline wasn't much. It was only 1%, but it was a decline. And those who made the most money out of the recent Sydney property boom were already in the market. But we know that, unfortunately, people get too influenced by the media, and a lot of people bought into the Sydney market in late 2016, early 2017, that FOMO effect, the fear of missing out. They've probably lost money already. Right. But those who made really, really good money disregarded all that and focused on the fundamentals. They either got professional advice or they educated themselves and learned to read markets properly and not read newspapers or iPhones. Massive difference. Reading isn't research. Reading's just bloody reading.
Yeah. Hence the reason why you've got a job as head of research, because research hard around property. And I look at my own experience. I have every single piece of information available to me for me to do my own research around property. Number one, do I know what I need to be looking for? And a lot of people's view of research is proving or disproving a theory. And a great researcher goes into any type of work without any particular bias one way or another. And a lot of people say that's the way you should research, is to prove or disprove a theory. But when it comes to property, it's about truly understanding what the drivers are which are going to influence positive price growth in property. and then finding those locations around it. So a lot of people go to research property, go, I'm going to invest in X, therefore let me look at research around that particular town rather than let's look at macro, microeconomic factors, macro, micro property factors. And this is the deep dive that you do in your research, and then translating that to a location, and then translating that to a type of asset, whether it's a house or a unit, whether it's whatever, and then translating that to long-term projections for growth. And that's the seek around property research. I could probably do that if I had a full-time job doing that, but I don't want to be doing that. And I prefer to lean on people who do that for a living, who have been doing it for a living for a number of years like yourself, to tell me what to do, right? This is the mental flip that a lot of people need to make it sometimes, that sometimes you got to pay for good advice, you know, because it's hard to get it yourself. It's hard to work it out yourself. And it's not very often I meet an investor who has been able to build a quality portfolio doing it all by themselves. And you must see that the clients that you work with as well, right?
Yeah, I mean, they are out there, but I agree with you. They're few and far between. I mean, whether you do it with a professional, whether you're a DIY, the tax office put these figures out once a year, and it's less than 1% of Australian taxpayers that own 6 or more investment properties. Less than 1%.
It's tiny.
So there's not many truly successful property investors out there, really.
Scary, but good. It's good if you're part of the 6% or 1% of the own 6 or more.
Yeah.
But, okay, so just let's crystallise this chain of thought. Don't worry too much about what the media is saying. Make your own judgment and your own assessment on the state of Australia's property market and the state of markets within markets. And a market within a market could be a particular street, a particular suburb, in a particular region, in a particular capital, right? That's what a market can be. But understand what you're looking to achieve investing in property. Cut out the noise, get clarity is probably what I'd say. Yeah,
and bring it back to the basics, because you're not going to read that in the media.
So what are the basics? Let's just name 10 things, if we can get that far, that you should be thinking about if you're looking at a particular market or investing right now.
Okay. Try to
put you on the spot.
No, try to put it in some sort of order for people too. Understand cycles. So a growth cycle is when you're hearing on a regular basis that prices are increasing. And obviously, Sydney and Melbourne their growth cycle is finished. So no matter which town or city we're talking about, the time to invest is not in the middle of a growth cycle, or in Sydney and Melbourne's case, at the end of a growth cycle. Not only do you increase your chances of your asset declining in value, if history repeats itself, you are many, many years away from the next growth cycle starting. Growth cycles don't end 1 year and start 2 years later. It is exceptionally rare. I don't know of one case for that ever to have happened in Australia's history. So, but it doesn't mean because a market's flat that its growth is about to start either. But you're going to be much smarter buying in that flat market that hasn't seen growth for a while than, say, at the end of an end of growth cycle. That's one thing. The gold information, where we, probably put 80% of our basis for selecting a location is on the economic stuff. You're not going to read about that in the back of a magazine or on CoreLogic, or some good information there, but the gold stuff's not there. In fact, it's most of that information not even in numbers. It's understanding industry. It's understanding tourism, retail, agriculture, manufacturing, health, education. What's the outlook for each of these sectors? What role does Australia play in the Asian century? That's the really exciting stuff. The future of this country, if we take advantage of that, is really exciting. I'm sure the broader property public have heard of these things called free trade agreements, but they probably hear that term on the news and tune out. I tell you, there's a lot more important information in that than some negative report about Sydney house prices declined by whatever, or the auction clearance rates did whatever on the weekend.
Yeah.
That's rear vision mirror stuff. The future is what investing is about, and the good information is what's an economy likely to do. So understanding the outlook of each of the industries, that's what we do, and then we drill down into industry participation in various towns and cities throughout Australia, and then we get the microscope out on what the key employers in those industries are doing. And when we start to see workforces expanding or about to expand, jobs creates confidence, creates wage growth, creates demand for housing.
Pretty simple.
When you say it like that, it is. But I can assure you, even doing it all day, every day, there's never enough hours in the day to do what you want to do.
That's really good. All right. So that's got to get us out. So to crystallise those points, market cycles, number one.
Yep.
Macro economics. Yep. And then I'm going to say micro or local economics. So that's point. Let's go to point 3 there. So point number 4.
Yep. Housing supply.
Okay.
I mean, look, for many, many years, Propertyology was producing charts and statistics and cautioning people, saying there's going to be an oversupply of housing in Sydney and Melbourne. And people go, yeah, blah, blah, blah. You can't oversupply these really big cities. Well, where are we now? I think it was just last week that SQM reported that Sydney's had a 13-year record broken for its highest vacancy rate. Now, it's not catastrophic, but now the proof is there of what we were cautioning people of years ago. And let me tell you, any capital city, any regional location can be oversupplied at any point in time.
Yeah.
But it's not just looking at the time of investing, is it oversupplied now? Because once you bought that property, you don't want to go to all that cost and sell it a couple of years later. So we spend an enormous amount of time looking at the building approval volumes. So that's the precursor of what's coming up in that market for the next few years. Now, beyond that, no one can tell you because the developers haven't decided what they're going to build and how many they're going to build. But that's the best information that an investor can look at from a supply side of things.
Good point.
Another point, general sentiment.
Okay.
I think it's impossible to measure, like by a number.
Is sentiment the same as confidence, or are they different things?
Yeah, it is.
Okay.
And look, right here and right now, if we do talk about Australia as one big property market, we'd say sentiment is negative because all we're hearing about is negative information, a bubble bursting, and APRA's made it too hard for people to get loans, and properties are too expensive. Gross generalisations, but if it's reported en masse, it affects the buyer psyche. Let's face it, property is expensive no matter where you buy it. If it's a $200,000 house or a $2 million luxury apartment, it's still a lot of money. Yeah. And that buyer needs confidence to do that.
Okay.
Now, that confidence will vary from regional location to different capital cities.
And it also varies based on the personal experience of the investor. You know, where you are in your own personal life cycle. Yep. You know, have you just gone from 2 incomes to 1 income? You know, your sentiment of confidence is going to be very different to someone that's just got a $50,000 or $100,000 pay rise, right? Whether that happens, I don't know. But okay, good point. All right, let's go 5 more points. So we've spoken about the stuff you really can't control, right? The market. You know, you've got no influence whatsoever around jobs growth in your particular region. You got no influence whatsoever on whether or not a new free trade agreement is going to be signed between Australia and South Korea.
Yep.
You can't control that stuff.
No.
But it's critical stuff when it comes to looking at the investability of a particular location. Let's do the next 5 points on the stuff you can control. When you're looking at this kind of thing.
Those dot points there, Phil, I'd say are the main things to look for in picking a particular town or city to invest in.
Okay.
They're the macro level ones. And then I guess once you've ticked all the boxes there and you've decided which town or city you're going to invest in, you then start to need to look at the more micro level. So which pockets within that location. I really don't like the term suburb. I know that it's referred to all the time in property material, but it's misleading. A suburb is an imaginary line on a map. It's not like we're driving along in this particular suburb when we cross the street and all of a sudden, oops, there's that magic line. It's worth a lot more money over here. It's used to send mail to people.
Yeah.
But it doesn't mean that once you cross that street that all of a sudden these ones are going to boom. So we look for pockets, not for suburbs. But what do we look for to pick a pocket? It's a combination of central proximity to employment nodes is key. We're not going to be living in the property as an investor, and we're not going to be buying a property for a specific tenant to live in, but we want to make it appeal to, I guess, the biggest segment of that particular town or city possible.
Okay.
And we know that proximity to work is a key decision that everyone makes, whether it's your own home as an owner-occupier or a tenant. So we don't know where your tenants are going to live, but if we're buying a property in close proximity to big employment nodes, so whether that's close to the CBD or whether the bigger cities have multiple employment nodes, spread out in the suburbs. So that's what we look for.
Pockets, good.
The style of dwelling is important, very important. I would say don't generalise and say houses are better than apartments or apartments are better than houses. You need to make that decision for that particular town or city. There are times when, believe it or not, when in a particular location, the vacancy rates for houses might already be on a little bit of the high side, and then the approval volumes, so what the construction industry is looking to do in that particular location, might be much higher for houses than apartments. So it actually might be better in the long term to pick a basic apartment. But if you're buying an apartment, then you need to add to the list, check out that individual body corporate. Avoid the big ticket expenses like lifts and swimming pools. tenants might like them, but tenants don't pay for them.
So what you say? So I'm going to do. There's another point. So pockets, the area, the livability of the area. That was point number 6.
Yep.
7, the style. So style. So you split it between houses and apartments,
Yep.
and that's based on forward thinking in terms of building approval,
Yes.
et cetera, et cetera. And then if you go, all right, it's an apartment. What type of apartment? Is it a one of the big sort of huge block? Is it off the plan, or is it something in a boutique block somewhere without all the heavy strata and pools and lifts and all that sort of stuff?
Personally, if I'm going to invest in an apartment, house or apartment, I will never touch new.
Yeah.
The price of any new property, no matter where it's located, is loaded with so many taxes and all the commissions to all the marketing people. That first buyer is paying for all that. You're behind the 8 ball from day one. If this property style is apartment for a particular location, I keep it simple. I call it the meat and potatoes property. In low density, small complex, low maintenance. Doesn't greatly matter what age it is.
Yep.
In fact, if it's old, the builders took more care back then.
It's not going to fall down, right?
Absolutely.
All the defects have happened already, right?
Yeah, yeah, and you can easily. Apartments are so easy to renovate if that particular apartment you buy will benefit from that. They don't cost a lot of money.
Yeah.
The bones are there. You're talking paint, carpet, basic kitchens. It's easy to
On
do.
the cheap side. Okay, we've got 2 more points to cover here.
We're very street specific. So I said we pick pockets.
Yeah.
So that's a broad part of a town or city. We literally drive down every single street before we buy anything. But before we drive down every street and form opinions with our eyes, we meet with face to face with the key decision makers in that community. So to us, that's the mayor, that's town planners.
You actually meet the mayor.
We meet the mayor face to face.
Does the mayor want to meet with you?
Back in the day, it used to be hard,
Yeah.
but with a few stripes on the sleeve, we usually we do manage.
Well,
to
do you
get
reckon they
meetings.
hold a council meeting saying, "Oh, Simon Pressley, Propertyology rocked up here. I think we've got a good suburb."
Most of them are media shy, so they don't want to publicise that we're there. We don't want to publicise that we're there either, to tell the truth. But why that's important to us is we've all got eyes. We can all drive down a place and down a street and have a look. But if you're contemplating investing in that city, what's more important is not how it looks now, but how it's going to change over time.
You know what? I'm going to give you a point on this. For point number 10, I'm going to call it local leadership, because you know what? That's really going to shape how a suburb, a pocket will grow and evolve. Who is behind the local council, who is shaping the strategy for growth in that area, because it's absolutely critical. If you've got a forward-thinking open council who's looking to diversify its economic base, that's what you need. That's a huge driver.
Well, if you think about it, it doesn't matter which part of Australia we're talking about. The local council must approve any new structure, whether it's an established house adding a carport or a bedroom, or whether it's building a bloody multi-billion-dollar airport. It must go through the local council at some stage before anything happens. So that's why it's really valuable information to Propertyology. Before we go and sit face-to-face with council, we'll have a whole heap of information that we've already researched. Now, some of those things might be approved, some of those things might be proposals. At the time of investing, we don't know whether the proposal is going to be approved or not, but sitting face-to-face with council, more often than not, they're happy to say to us, this isn't a guarantee, but this is what that decision hinges on, and it's quite likely to happen because of A, B, C, D, E. So we can then factor in that change that hasn't occurred yet into our decision as to which part of that city what might we invest in. So there could be zoning changes, density changes, it could be infrastructure projects, it could be roads, tunnels, factories.
Are they happy to share that info with you, or it depends on the council?
They have an obligation. They represent the community, so they can't hide anything from us.
So is anyone able to go and get a meeting with the mayor or someone senior within council?
There's no law saying they can't. But
it's hard.
But good luck trying to get the meeting.
Right?
Good luck trying to get the meeting.
But it's interesting because you want that layer of transparency if you're looking to because you're investing in the local community, you're just not investing in property, right?
Yep.
And I think that's a good point. Point 10 around the leadership of the local council. What is their attitude and aptitude towards embracing change in their community? Because I travel a bit around Australia, and you just know sometimes you arrive somewhere, you go, this place got a bit of a buzz about it. They're looking to change. Whereas you go to other places, you just go, this town hasn't moved on from the 80s, And when you walk a high street and you see half of the shops empty, you sit there and go, is that really because people all shop at Westfields now? Or is that because the the leadership within the local government isn't keeping up or isn't keeping pace with the rate of change in how people are living their lives right now. So it is a difference.
Absolutely.
Yeah. Okay, good. I think we've done pretty well there. So I'm going to crystallise those points. He gives plenty of content on smartpropertyinvestment.com.au. Let's flesh this out. I think we'll do some stories around it. So at a macro perspective, so the stuff you can't really control, but you need to have a really good understanding to help dictate the type of areas that you're going to invest in, understanding market cycle, understanding the economics of that cycle, looking at the outlook for industries and diversification within those areas, the level of supply and of property up, down, what's in the future, more importantly, and then the overall sentiment, confidence at any given time.
Yep.
You can't really do much about that. But when you look at the investability of a place, the stuff that you can control, you can control where you invest, so which pocket and why a particular pocket would be best, i.e. the livability and why someone would want to live there. The style of property to match those pockets, so is it a house or is it a unit? Then the type of stuff, so if you choose a particular asset class being an apartment, what type of apartment do you buy? Then you go right down to the street area, so every street is different, and then just the local leadership, the local attitude of Council for Growth and Development. They're probably 10 pretty good points that you can arm yourself with and go out there and become a researcher in some way.
But it also highlights how complex it is, isn't it, to make
Bloody
this
complex,
really important decision called investing in property.
It is, and I wouldn't tackle that alone. That's the reason why I pay good advice for it. But anyway, so I think we've done well there. So let's have a real quick look at Eastern Seaboard markets.
Yep.
We haven't got time to go right around Australia. We'll do that next time you're here. And I'm going to count Tassie as Eastern Seaboard.
Right.
I don't know if I'm going to make any friends or enemies there. Tasmanians,
Long as you count it somewhere.
They hate being left out. So I'm going to say it's to the east, right? It's its own island. But let's start in Tassie.
Yep.
You've been a big advocate of Tasmania for many, many years.
I would suggest that Tasmania's...
You should get the key to the city of Hobart, I reckon.
number one ticket holder.
Beat it, so. Is it still good or is it done? Is Tassie done?
No, it's definitely still good.
Okay.
I would argue it's still the best performed market in Australia right now. Now, as I said when we were here 6 months ago, that will come to an end at some point. But still, the metrics that we look at to get, I guess, some insight is the end close.
Yeah.
We can't see that yet.
Okay.
The broader Tasmanian economy, I would suggest, is the single biggest success story in Australia, not just property markets, since the onset of the GFC 10 years ago.
Yeah.
That state was in recession. It was on its knees for a good 4 or 5 years, and now its economy is as good as New South Wales and Victoria. I don't think the nation's done enough to pat Tassie on the back for the wonderful job it's done, and some other states that have been quite underwhelming could learn a lot from tapping into the Tasmanian government saying, what'd you do? Because it's worked.
Yeah, so you just covered a couple of things there on those 10 points we just looked at. So cycles, absolutely. Leadership, economic development and diversity, So these are all these things in action, right?
That you won't find in the property media.
You won't find in the property media unless you listen to smartpropertyinvestment.com. Anyway, okay, Melbourne. Thumbs up, thumbs down, thumbs sideways, head in your hands.
Sideways.
Yeah.
The cycle is definitely well and truly behind us. The economy's still strong.
Yep.
Melbourne and Sydney are very similar. They both still have strong economies. They both have an increasing volume of new supply already hitting the market, but I think there's a couple of years of that still to come through.
Okay.
Melbourne, I think, is less fragile than Sydney because it's benefiting from population growth in a different way to what Sydney is. Sydney's population grew by 100,000 people for the first time last year, but 84,000 of that was from overseas. And Melbourne always gets a high proportion of overseas population growth as well, but it's got a lot more interstate migration, especially from Western Australia. Now, I think, jumping quickly to the West Coast, if I may,
yes.
Western Australia's economy has stabilised. I'm not in the camp that is really bullish about WA, but it's stabilised. Now, we may see, as that economy over in the West continues to improve, some of those Victorians go back. But I'm less concerned about Melbourne than what I am about Sydney, but I wouldn't be investing in either for quite some time.
Okay, well, let's chat about Sydney then. What makes you nervous about Sydney? It's just done its dash this cycle?
The affordability. And then we're already seeing pockets. I mentioned earlier the high vacancy rates. It's not alarming, but it's not going the right direction.
Well, some of those pockets, and I spoke about it recently, is along that new northwest rail link, right? There's heaps of vacancy out there because they just built a whole bunch of apartments. Cycles.
Yeah. The economy is strong. So anyone who already owns property in those markets, I don't think there's any reason to be alarmist in spite of what you're going to read on a regular basis. The exception is if it's if it's costing you a lot of money each year to hold that property, that's a discussion you need to have with yourself. Is this a really good decision? You can't control what the asset value will do. I think you're some years away before you'll see some growth. But if it's not costing you much to hold that, that's investing in property. That's going to happen in every property at some stage, isn't it? But if it's costing you $20,000-$30,000 a year to hold, then that's a difficult decision.
It's funny. You just made me think about my holding costs from my portfolio, and I sit there and I look at what it cost me to hold my entire portfolio.
Yeah,
it's a bloody lot of money, right?
Yeah.
But then when I look at each individual property, like some of them don't cost me anything to hold. Some of them cost me like $1,000 a year to hold, right? $1,500 a year. So I go, $1,500, that's not a lot of money. But times that by, however, it's a lot of money, right? So it's the context of it all. So the bigger your portfolio is, the bigger your holding costs are going to be.
Yep.
But the bigger your portfolio is, if you've built it the right way, the greater that layer of diversity you should have.
Yeah.
So you're open, you've got greater exposure to different markets which all operate in different cycles. So this is small versus large portfolios, very different dynamics.
Yeah, I think we've got similar principles, the way we invest.
We invest the same way,
Yeah.
As in we buy stuff that we want to go up in value and we don't want to spend too much holding it.
Affordability is a non-negotiable of what we buy.
Absolutely. Yep. And before we come on there, we spoke about that very briefly where the game has changed for property investors where chasing those, I put inverted commas, blue chip, and blue chip in Sydney is very different to blue chip anywhere else in terms of absolute price, in Melbourne as well. People who are playing in property investment now, a lot of them have had to change where they're choosing to invest. So rather than chasing blue chip stuff, it's a lot harder to get debt right now. So they're passionate property investors, so they're playing in the affordability space, which is putting greater pressure at the affordability level, which is great for people who have properties in a portfolio which are of the affordable category. And affordable, we're talking about in Sydney, is $700,000, right? That's a lot of money. In Brizzy, it's sort of $350,000, $400,000. So it's still a lot of money, but for a property investor that plays in an affordability space, it's not a bad time to be a property investor considering market flux. But sort of we're getting a bit away. Brizzy, let's finish with that. What do you reckon?
Brisbane's getting a lot of attention, but not because it's done anything different to improve. It's more, I guess, the investors recognising Sydney and Melbourne have run their race, where should I consider?
Yeah.
Unfortunately, most property investors aren't very imaginative, don't really understand property markets, and it just leaves Brisbane left by default. But it's performing the same now as what it has the last 10 years, which is not backwards, but underwhelming, disappointing. I think the last 12 months, Brisbane's median house price has grown by about 2%. At least it's grown. Yeah. But the things that will make it grow more, and Brisbane's my hometown, a family home and a few investment properties in my hometown. If anyone wants Brisbane to grow, it's me.
Yeah.
But I reckon I get asked on a daily basis, when the bloody hell is Brisbane going to grow? When the economy and the state government get their shit sorted is when that will happen. And I can't see that happening anytime soon, sadly.
Back to leadership.
Keeps popping up, doesn't it? The economy's not terrible, but it's uninspiring. The state government debt is the highest in the country. So to stimulate the economy, New South Wales created the template for it.
Yeah. New South Wales done a very good job.
Absolutely. Now, I know it was controversial when Mike Baird, back then when he was Premier, said, I want to sell a couple of major assets of this state, but you're still going to have the assets. But what we're going to have is tens of billions of dollars are going to create a whole heap more new infrastructure you don't currently have. Now, he's done that, and the New South Wales economy has been the best in the country since he's done that. Queensland, believe it or not, has more assets than New South Wales, but yet it's only half the size in population. Yeah. And the state's paranoid about selling the bloody things. Well, if you can't borrow money because your debt's real high and you've got all these assets you're not prepared to sell them and you've got no frigging leadership, how are you going to stimulate the bloody economy?
Well, I'd like to see Brizzy start firing. We've got quite a lot up there. And I think where we've acquired property in Brisbane over time will be good. We've got quite a lot around the new university precinct, right? Yep. And I think we'll be right there, and we didn't overspend on this stuff either. We bought a block of units in Lawton, which is right on the train line, just down from Petrie. We could pack up full of students at some point, right? So I think over time we'll be okay. But it's going back to these macro at the stuff I can control in buying this stuff. I've done all the right things.
Yep, absolutely.
It's the macro stuff that I can't control that I've got to sit around patiently and twiddle my thumbs.
Spot on. The fundamentals of Brisbane are solid, and they have been for a decade.
Yeah.
At some stage, someone will get the message, and they'll do the things that need to kickstart that that economy. Because the underlying fundamentals are strong.
When are you running for Premier then? Let's get you in there.
I hate politics, but unfortunately with you can't be a full-time property market analyst without following what all the politicians are doing. So
Absolutely.
all that does just make you grumpy.
Yes, it does. All right, Simon, I enjoyed that. I think we've done pretty well there. Those 10 points, we'll get them up on the website, so go and track them down, smartpropertyinvestment.com.au, and we'll flesh them out a little bit as well. But if you keep them as guiding tenets, as you go down a path of either adding to your portfolio or entering the property investment market, you'll be in good stead. And remiss of me not to do a disclaimer, and I don't particularly like doing them because you should know this by now, but this is just a general chat. So anything was said, don't take it as advice. I'm not in the business of giving advice, but hopefully it can stimulate the conversations that you have with your trusted advisors who you should be turning to for any advice when it comes to making any investment decisions. So that's a disclaimer done. Same for you, isn't it? Oh, you're happy to give advice.
Given any advice.
You give advice, don't you?
When professionally engaged, yes.
Yes.
Yeah, but today's just been general guidance and hopefully some good education for investors out there.
Brilliant. Nice one, Simon. Let's get you back in the studio soon. There's a bunch of questions that we've got, so I might get you down in a week or so and get you to answer some of these things if that's cool.
Would love to.
All right, nice one, mate. And remember, check out Smart Property Investment. You'll see when Simon's on next. You can subscribe to our daily morning newsletter so you're the first to know what's going on in property across Australia. smartpropertyinvestment.com.au/subscribe. If you prefer to get your info from social media, just search Smart Property HQ on any of the social channels. You'll track us down, like us, love us, follow us, and please, those reviews through iTunes or wherever you're choosing to listen to this podcast, please keep them coming. The team absolutely love them. It makes their day when they get good reviews coming through. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.